What's up, everyone? It's Caddy with Money Vesting. Welcome on board for another Market Open live stream here. We do have the NASDAQ ETF down close to 1.5%. We got the SPY down over 1.15% and the Dow Jones dropping over 85 basis points right now. So retail numbers from Walmart, Target definitely weighing in on the markets here, putting a lot of pressure. I broke them down earlier. And of course, we talked about the highest cash allocation right now on Wall Street and from fund managers since 9/11, 20 years ago. So that's also been another sort of like the thing that we've been talking about. One of our speculations have been that Wall Street, there's not been any big buyers or not any of the whales have really been plowing money into the markets, but instead they're taking liquidity out. And we've seen a lot of, equity asset classes in terms of equities, bond market, commodities, cryptos. They've all basically seen money flow out of those asset classes as well. So that's where we're at right now. Yesterday was a very strong day, but today we're starting off once again with pre-market selling off. I'm gonna go over the earnings, go over the upgrades, downgrades, and some important things to go over. But once again, thank you so much for joining, everyone. I really appreciate it. Make sure that you all drop a like, and of course subscribe if you're new. Brandon says target to $0. And yeah, there's just a lot of companies dropping on earnings, right? So we have had a fair share of a lot of companies like PayPal, Facebook and Netflix and Upstart and Amazon. And, now you got the staple companies, even the retailers like Target and Walmart are not immune to this type of market. I mean, think about it. Right? Target is probably going to have one of its worst days for the stock prices, down close to 25% right now. So absolutely brutal. But Target here plummeted 22% in pre-market after the retailer reported adjusted quarterly profit of just over $2 per share, below the $3.07 estimate. So that was a big decline year over year, about a 48% decline year over year, and also coming in shy of expectations here. Lowe's also fell 2.9% pre-market after the home improvement retailer's quarterly comparable store sales fell more than the expectation, and revenue came in slightly below street consensus. So Home Depot actually did much better. Yesterday, Home Depot was actually the bright spot for yesterday's earnings, so it was higher. On the day, it was pretty much got sold off, so it was actually much higher. In the day, it was trading as high as $311. At one point, it was up over 5-6%, and then got sold off right away. And pre-market, once again, it's selling off 2.3%. And Lowe's, Target, Walmart, they've all been having like one of their worst weeks in a very long time. Weekly mortgage demand from home buyers tumbles 12% as higher interest rates take their toll. So mortgage rates actually fell slightly last week, but the damage has already been done to the housing affordability. Both refinance and purchase loan demand dropped, pulling total mortgage application volume down 11% for the week. So this real estate market is going to be a bit of a lagging indicator, so we're not going to see the impacts on the real estate prices until a few quarters from now. But mortgage application to purchase a home declined to 12% week to week and were 15% lower with the same week 1 year ago. And that was the first weekly drop in home buyer demand since the third week in April. And mortgage rates have risen over 2 full percentage points since the start of this year, and home prices are up more than 20% this year. So 30-year mortgage rates are also well over 5% right now. And Lowe says decline as cool spring weather weighs on demand for outdoor products. Now, I've heard two reports and read the transcript. The weather apparently is a big issue right now in the US. What's going on, guys? Like, I'm not there, so I want to hear from you. Like, is the weather really cooler than normal years? Because we heard from Walmart, nobody wants to buy grills or pool chemicals, or nobody wants to actually stay outdoors because it's cooler than usual. And Lowe's also said that the cooler spring weather hurt demand for supplies for outdoor do-it-yourself projects, and reiterated its full-year outlook, saying it expects total sales to range between $97 to $99 billion, but same-store sales range from decline 1% to an increase of 1%, so give or take plus minus 1%. And earnings per share were $3.51, came in much better than expectations at $3.22. And $23.66 billion versus $23.76 billion was the revenue number, came in a little bit lower. And the results diverged from those of its competitor, Home Depot. On Tuesday, Home Depot surged beyond Wall Street expectations for quarterly earnings and revenue, chalking up its growth to home appreciation and boom projects for housing professionals. So two companies definitely because of spring weather hurting a little bit because of their outdoor projects and outdoor products not selling through as fast or as much as some of the other product categories, which might be low margin. But overall, Lowe's did somewhat much better than I would say Walmart and Target. So Shabir says 95 degrees in Florida. So it is hot, right? So 95 degrees is pretty hot, right? It's almost exactly as what we have over in India. So Florida is definitely hotter. Brandon says 58 by me right now when it's supposed to be 85. Really? That's actually a big difference, right? When it's supposed to be 85, but you're actually, if you actually have 58 right now, that's definitely a lot better. But 80 in Virginia. So yeah, so I think that might be one of the reasons why their outdoor products are not selling as much. But households are now spending the equivalent of $5,000 a year on gasoline, Ed Yardeni said. And he's, again, we look up to him for a lot of research, Yardeni research. He does a great job in putting together a lot of reports and stuff. So we have cited those reports in the past. But U.S. households are now spending an equivalent of $5,000 a year on gasoline, up from $2,800 a year ago. So that's a good 85-90% jump year over year. And in March, the annual rate of gasoline spending was at $3,800, Yardeni noted. And during the week of May 16th, the national retail price of gasoline reached a record $4.59 per gallon. And he says, and I quote, "No wonder that the consumer sentiment index is so depressed. The wonder is that the retail sales have been so surprisingly strong during April and May. But on an inflation-adjusted basis, they've actually been weaker, right? So we've still seen a negative retail sale growth because once you adjust that for inflation, they've pretty much flatlined. So we talked about the consumer sentiment. We talked about consumer expectations. They've come down 20% on a year-over-year basis, and those are some of the things that I also mentioned that we're going to be tracking on a consistent basis because consumer sentiment, for one, is coming down to the same levels as it was back in 2011, right? So we're getting down to our 11-year low. And most of the times when consumer sentiment is this low, it has followed that up with a recession. So that definitely is something to track. And of course, gasoline prices continue to go higher. AAA average still sits at well over $4.50 a gallon. And Yardeni said consumers' inflation-adjusted incomes are barely growing. So we also looked at that. So right now, adjusted for inflation, we're seeing a negative 2.8% growth for earnings. So real earnings are still going down because inflation is at 8.3%. Earnings grew 5.8%. So when you adjust for those two, we're still seeing negative earnings growth. But Yardeni said, "Don't bet against the U.S. consumer." He said, and I quote, "When we are happy, we spend money. When we are depressed, we spend even more money." So that's what he finished that up by, saying that, don't bet against the U.S. consumer. People do tend to spend more when they're happy, but even more when they're depressed. But retail sales data for April released Tuesday was surprisingly strong. On a year-over-year basis, retail sales rose 8.2% in April. But then again, as I mentioned earlier, when adjusted for inflation, they're more or less just flatlined. Target shares sink more than 20% after company says high-cost inventory was hit profits. Now, here's my concern. Target, Walmart, and Amazon. Collectively, all three companies have mentioned that they overhired and overstaffing was an issue. And collectively, they employ close to over 4.5 million people in the US, right? I mean, globally. One shouldn't say US, but globally, they employ 4.5 million, which majority of them are actually in the US. So my concern really is if this overstaffing and overhiring is an actual issue, which is obviously, affecting their operating expenses and their margins. If these companies actually do start laying people off, then that can, start to spike that unemployment rate from 3.6%. We could be back to 3.8, 3.9, potentially back over 4%. And that is going to be a problem for the US. So that is something that I'm definitely watching. The initial claims and the job reports that come out on the first Friday of each month, I think are going to be very important because that is a bright spot for the US right now, right? The reason why Fed is able to be a little bit more aggressive is not because inflation is high. Obviously, that's their goal, to bring inflation back down. But the reason why they're able to do that is because the job market's so tight, right? The labor market's so strong, right? If it weren't for the actual people that are working, and their wages are going up, obviously inflation adjusted, they're not really, the Fed would not have been able to raise rates as fast as they are. So the unemployment is a bright spot right now, but it doesn't take too long for that to also go up. So that's a bit of a concern that I have right now in the near term is if these companies who have really said that overstaffing, overhiring has been an issue for them, if they actually do start laying people off, then that will obviously not be good, because a lot of these, businesses did really well during the pandemic, right? People ordering online on Amazon, Walmart, Target, all these were, doing really well, and they overhired. And then once the demand starts to slow down, or the demand shifts from a certain item, certain product group to something else, then, obviously margins are getting hurt right now. So, we've already gone over this, so I don't have to go over this again. I just did a video on Target about, an hour ago, so you're more than welcome to check that out. But let's just go over some upgrades and downgrades. So we got Piper Sandler reiterating Tesla as overweight. They put a price target of 1,035, which has been lowered from 1,260. And we are cutting our estimates and price target to reflect the pandemic-related weakness in China, as well as our higher weighted average cost of capital. That makes a lot of sense, assumption in our DCF models. So again, weighted average cost of capital is a mix of the capital asset pricing model, which takes into account the cost of debt and cost of equity, both of which are probably going to go higher as interest rates go up, right? So when we look at the discount rate or the WACC, in other words, the present value of future cash flows is worth less, thereby reducing the valuation for a lot of these companies as interest rates go up, right? So as interest rates go up, the present value of future cash flows is worth less, and that's what they're saying right now. And then they're lowering their price target to 1,035. So Trey says, hi Caddy, if I don't get the actual notification bell even in my feed, this only shows up when you're at the home page. That is really weird. And yeah, I immediately noticed that, because when I went live, I waited for like a couple of minutes and nobody showed up until I actually posted the link in our Discord, and then of course people joined. But it might be like a YouTube glitch. They might not be sending out notifications for some reason. I don't know. I don't know why that's not working, but maybe it works in the future and once they've got that fixed. But Goldman Sachs initiates Visa and MasterCard as a buy. We got Wells Fargo reiterating Disney as overweight. Wells Fargo reiterates Netflix as equal weight as well. Guggenheim names Paramount and Meta Platforms as top picks, and saying it's bullish on its metaverse growth. And Bard names Block as a fresh pick, with Wells Fargo initiating ServiceNow as overweight. And then we got UBS reiterating Peloton as a sell, and then Roth upgrading Salesforce to a buy from neutral as well. So once again, thank you so much for joining, everyone. Welcome on board. Good morning. And make sure that you drop a like and subscribe if you're new. We've talked about a lot of different things, and the market's here not looking too pretty. We've got the NASDAQ ETF down 1.5%, with the Dow falling close to 1%, and the S&P is down 1.25%. And individual stocks are obviously not looking too well either, with Walmart down another 2%. We've got Target down 25%. So there's selling across the board, as retail sector is somewhat underperforming right now, with a lot of tech stocks also selling off. So Nvidia is down 2.5%. AMD is down close to 2%, with PayPal down close to 2%. Google 1.46%. Tesla is down 2%. Amazon down 3%. So Amazon probably is going to have a brutal day after Target's earnings. And Meta Platforms down 1.63%, and Apple also down 1.69%. So yeah, I think it's really, really important to track some of those things that we have talked about, because that's what's going to give us a good understanding on how the consumer's positioned. If you take a look at under the hood, and that's something that I went over in my yesterday's video, is that sure, there's a lot of companies saying that consumer's strong, spending is strong, they're positioned well. In my opinion, things are, at least the consumer side, we've seen the savings rate come down from 33% down to 6%. So people are saving less of their income. That's not good. Consumer credit has been going up, so people taking on slightly more debt to continue to operate at their whatever lifestyle they have. So consumer credit's been going up, and at the same time, obviously they are spending the same amount of dollars but getting fewer items, is what they mentioned in the Walmart report as well, right? So average ticket price, that means average order value on Walmart for their customers, is up 3% year over year. That means they're spending more money, which is why revenue was up for Walmart, but they're getting fewer items. So the items in their basket were less from what we had last year. So that is what inflation is on a consumer level, right? You're spending the same amount of money, if not more, but you're getting fewer items. So, that if those signs continue, if inflation doesn't come back under control, then certainly that's going to be an issue from a recession standpoint, because that could add more volatility, could add more weakness. Another thing that I wanted to go over is that Bank of America Global Research Report pointed out that Fed put is going to be at 35.69, closer to 3,500 points on the S&P 500. So that's going to be about a 14% decline before the Fed decides to step in, according to Wall Street. So, and then another 27% total decline from all-time highs before the Fed put supposedly kicks in for the markets. That's going to be around 3,500, and that's going to be a 27% decline from all-time highs. So, all right, let me just read some of the chat here. So, let's see. Same thing's happening with me, Robinson says. So, yeah, I do apologize to you guys. I don't know why the notifications are not going out. So, maybe just like, turn off the notifications and then turn them back on. Maybe that helps. But we'll see. So, Berg, Martin, welcome on board. Happy to have you here. Perfect time to get some Upstart. Let's take a look at how Upstart's doing. So Upstart had a very nice day yesterday, up over 23%, but right now selling right back down, 6.5% down today. Sold a covered call yesterday. Ranjit also, I know that has been doing really well on Upstart. And we also have a covered call up until June for $55 strike. So if Upstart sells off, then obviously that covered call is going to do well. That's a hedge against a potential downside day. But of course, if it sells off, then I'm completely fine with getting to deliver those shares at 55 strike. Eric says, I think YouTube will only send alerts for 2 videos per day per channel. Okay, that might be an issue because I have really been uploading a lot recently because the markets have just been crazy. Mark says people don't have any savings because their stock accounts were destroyed. This is in rock and sides. Yeah, I mean, that could be the reason why they're actually plowing more money into their brokerage accounts or maybe dollar cost averaging. But I think the bigger reason really is that inflation is actually eating more into their bottom line and into the American wallets. Because I mean, a simple example is gas prices, right? I mean, Ed Yardini puts up a great report and says, consumers now are spending $5,000 on average a year on gasoline when they were spending $2,800, right? So that, if you do the math here, 5,000 divided by 12, that's going to be roughly $416 is what they're spending per month on gasoline versus $233, right? Same time a year ago. So 238 versus 416, that's an extra couple $100 that people are spending every month on average on gasoline. So that those numbers add up when you look at certain items, when you look at groceries, you look at apparel, you look at different items, airline fares, all that stuff. So that obviously is going to eat in more into the bottom line for consumers. So like a star says, can you please throw your red mic? Oh God. Dollar Tree sells its goods being sold for 1.25. So how can you see inflation at peaks? Ranjit, what is that question? What do you mean? Dollar Tree sells its goods being old for 1.25. So how can you see inflation at peaks? Can you rephrase that question? I don't know if I completely get what you're asking, but I'm happy to go over that as well. So waiting for capitulation and lower inflation to start buying bargains, Pedro says. So yes, capitulation is really important for the markets overall, which, obviously from that report that we just went over from Bank of America Global Research pointed out that specifically the whales, and that's the hedge funds and, the fund managers and big money really hasn't really found its bottom yet, right? They still believe that the S&P has a ways to go to the downside, and this is indeed a bear market rally. And, we've talked about a quote unquote a mini rally for the markets, which again is not unusual for us to believe that because of how oversold conditions were, right? A lot of stocks, RSI and MACD, really, really oversold. So in the last couple of days here since Thursday, the NASDAQ is up over 8.4%. So, that's exactly what I think the expectations were from a mini rally or a bear market rally where, prices rebound a little bit. We see that relief rally, but it doesn't change anything from the context of the overall trend, right? So we're still in downtrend, still lower highs and lower lows. And, one of the questions that I, wanted you guys to ask yourself is that, has anything changed, right? Has anything changed from a few days ago or a few weeks ago? And if the answer is no, then, obviously there's no reason for us to believe that these rallies that we're seeing intraday are going to materialize into something bigger, right? If they're actually going to be a beginning of a trend reversal, because the Wall Street is still bearish. They're still sitting in cash, the highest cash level in over 20 plus years. And they have been the lowest tech allocation. So the most underweight tech in over 15 years. So when you think about those stats and you think about logically, right, you really get a good sense of how, Wall Street's positioned in this market. And, Oh, okay. So Renji says Dollar Tree sells their goods usually for $1. Buy now instead of $1. They increase to $1.25 now, all items. So inflation, their price increases. Yeah, so that's a 25% increase right there. They can obviously no longer call themselves a dollar store because they're obviously selling everything for more than $1. It's pretty crazy. And discount stores are the ones that usually do get hurt the most. I mean, if you take a look at Dollar General, if you take a look at Walmart, right? They've got two options. Number one, they either absorb all the cost, that's what they're doing, and lower their margins, lower their profitability at the expense of course, lowering their profits, but they keep their customers. The customers keep coming in, they keep spending. Or they pass on those costs to the consumers, and they keep their margins, they keep their profitability, but then they risk letting customers go because of the higher prices, right? So they've got two options, and you have to kind of find the right balance. And even in Target's report, CEO mentioned, I think it was the CFO that mentioned that pushing the cost over to the consumers is kind of like the last resort, right? They're not going to do that until it's like absolutely necessary to push all the cost over to the consumer. So right now, they're just going to continue to absorb that cost, and the margins are going to deteriorate. And that's exactly what we saw in the Target report, where earnings dropped 40 or 50%. But that's going to be their last resort if it's absolutely necessary. So as I said, inflation is the biggest concern right now in the economy, obviously with PPI, CPI numbers, and they're the ones that need to really kind of come down to make things better. If it keeps on accelerating, if oil prices, gas prices on an average basis keeps pushing up or stays pretty elevated, then it's not going to be a win-win situation at all for anybody in the economy, right? Not for consumers, not for businesses, and definitely not for the markets. So inflation needs to be under control. That's bottom line here, period. So UK inflation 9%. Yep. So that's also been running very high. So Mark says, I'm an avid shopper. Stuff isn't that much more expensive, not enough to account for the massive of savings drop so quickly. It's their market accounts being worth nothing. So yeah, I think that's a great question. Another thing that we have to consider is that the stimulus checks basically dropped, right? So one of the things that I actually forgot to mention in that video, and maybe I should have brought it up, is that personal income was higher. Maybe I did. I don't know if I did. Did I mention it? Let me just bring up that spreadsheet. Because we talked about how personal income also went down, right? So when you look at stimulus checks and how they were being given out during the pandemic, right? In the middle of the pandemic, personal income skyrocketed, right? So when personal income was up, savings rate went up to 33-34% because spending was lower. People weren't spending as much during the lockdowns. And then immediately after the reopening of the economy, personal income dropped, right? Because stimulus checks went down and monetary fiscal policy became less accommodative. And at the same time, they started spending more money. So that's why the savings rate also dropped substantially. So let me just see if I have that here. Maybe I don't. So I'll see if I can bring it up. But all right. So anyway, we got AMD, we got NASDAQ here, down close to 1.64%. We're going to switch over to the actual indices. I don't think we need to do the poll right now. And what did we talk about? Jim Craver, right? Yesterday talking about Wednesday could be a big rally for the markets. But you got to give him credit. He also said that if those retail numbers are going to be good from Target. But, we talked about it in our yesterday's market update. A little bit of humor in that report. But we've got the NASDAQ down 1.6%. S&P down 1.17%, and the Dow is down close to 1% right now as the retail sector gets hit hard. All right, so let's see. So Alexander says, I gotta agree. I don't really see higher prices in the food store or shopping malls. So that's good. I think groceries, even though they have been up, consumers may not feel that as much. Corporations do, because companies, even Walmart mentioned this, that they don't make money on groceries, right? It's kind of like a low profit margin business for the company. So I think it's more of a shift in demand for consumers right now. They're not spending as much on apparel or electronics, and there's been more spending on grocery items, kind of like the necessities right now. But once that shift happens, it's kind of like a lower margin business, which hurts their operating margins, gross margins for Target, for Walmart, and all these companies. So total bloodbath day, Anonymous says 4% down day. So Vincent says the same exact lawnmower I bought last year went to $2,600 from $2,000. That is also quite a bit of a increase in price. But anyway, volatility here, let's see, we are up over 5.3%, so definitely pushing higher. It has been pretty elevated, then we came down for the last 3 to 4 days, and right now we're just kind of trading sideways again. Oil prices are again pretty elevated, well over $113, $114 a barrel. And then crypto prices here, Ethereum selling off quite a bit, now back under $2,000, down about 4.6%, and then we've got probably Bitcoin also down 2 to 3%, down about 3%, just trading at 29,500 at the moment, as a lot of these crypto stocks also down. Coinbase, CleanSpark, Marathon, Riot, BITO, GBTC, all of them are selling off here on the day so far. So starting off with a red open, again, Target putting a bit of a pressure here on the entire market. And then we also got some other reports, right? Mortgage applications dropped to 12%. So it's only a matter of time, in my opinion, where we really start to see kind of like the effects of that in the real estate market, and prices start to kind of cool off, because they're still up 20% on a year-over-year basis, which is, again, for real estate is a pretty big gain on a year-over-year basis. If you had bought that same lawnmower, well, it would have depreciated as well, Brandon. So obviously you gotta account for depreciation over that time. So it's not like you bought that lawnmower for $2,000 and then 1 year later you sold it for $2,600. Sure, that's a great return, but it would be a used item, and you also gotta account for depreciation during that time. So, So the only grocery store that can fight inflation is Costco. We'll see. I mean, Costco, when do they report numbers? Let's just go over to Costco here. They don't report up until August. I think they already, wow, they're down 7.5% today. Oh, wow. How much is Walmart down? Down another 3.6, coming down to 125. And Target here is down 23%. These retailers are getting sold left and right. Amazon down 2.6%. So Amazon, thankfully, compared with other retailers, has a little bit of a technology aspect to its business, especially when it comes to advertising and AWS. So that's why I think its multiple is kind of broken down. So when you got price earnings multiple of 40 or 50 or whatever, a big chunk of that price earnings multiple is rated because of AWS and advertising growth, right? It's not because of e-commerce. E-commerce, very, very low margin business, and the growth is also slowing down, right? So it doesn't make up majority of that multiple. What makes the majority of that multiple is the cloud services and the advertising and all the other services, higher margin businesses that Amazon's in. So right now down 2.8%, but a lot of retailers just getting hit pretty hard. Even Costco down over 7.5%, close to 8%, just getting sold off here. So 436 is really going to be that level to watch. It had become really, really overbought when it was trading at well over $600+. I've wanted to buy Costco, but never really, dabbled into it because it was just really overbought. In fact, I do think that it's starting to sell off below its moving averages too. Yep, there we go. So this is a kind of a breaking point here for Costco, because if you take a look at, God, this is so annoying. Yeah, so if you take a look at overall trend for Costco, you'll notice that a very, very nice consistent move above its moving averages, right? So the 200 SMA, the 300 SMA acting as a very nice support. We have breached that level a couple times, and right now might be one of those levels again, but Costco here for the first time in a long time breaking down below its 200, 300 simple moving average. So down about 7.7%. Pretty big sell-off here. So Twitter, let's take a look. How is Twitter doing? Bacon went from $6 to $12, $13. That's 100% growth. That's insane. I was actually watching one of the videos where they were talking about a Social Security worker who was living on their pension, unfortunately. And one of their favorite food items was actually bacon. They were interviewing him. It was just like, I think, Business Insider or something, just talking about how inflation has gotten so high. And she mentioned that she has to forego buying bacon now because it's just so expensive at stores. I kind of felt bad, but it's just crazy. I mean, what kind of little sacrifices people have to make on a day-to-day basis just to fight inflation right now. Very crazy. But, again, that's the main priority for Jerome Powell, for the Fed to bring inflation down. And we've already heard multiple times from him over podcast, over FOMC meetings, research reports, notes, everything. It's just like dialed in, and we know what the plan is. I think the market has more clarity, but high money investing. I like the statistic. S&P was never down for 7 weeks. I'm long Netflix and out as soon as it hits resistance level to level. Yeah, I mean, 7 consistent weeks is going to be a pretty brutal losing streak for the Nasdaq and for the S&P. I mean, if you don't, at least see some buying here this week on Wednesday, Thursday, Friday, then of course this is potentially going to be the 7th week for the markets to be down. And we've already talked about how this is the worst start since the 1920s for the S&P, so in over 90 years. And I don't think anybody watching this live stream is over 90 years old. So we've all experienced this for the first time, at least in the first 4 or 5 months, as the worst start for the S&P 500. So we're making history, folks. We're making history here. All right, let's see. Yeah, Costco, I think, that's a great point. I think that's a great point you bring up. Costco is also in the oil business, so that might offset. Wow, Kevin, no way, you're kidding. Stop. I was surprised for a second. But yes, Costco is also in the oil business. That, definitely offsets some of those low margin business, and oil prices obviously has been much higher. So, all right, let's see here. So, road to financial freedom, great question. So usually during a recession of fears, people flood to consumer defensive, which includes your Walmarts and Costco's and Targets. But now we're seeing them sell off. What will people pivot to next? So great question. I think, for the hedge fund community, they've been positioned either in cash or energy. Pretty confident with that. The data suggests that. But for retail, I think Staples, let's take a look at XLP. And Staples is down close to 2% now. They're still going to be able to. So if you go into a proper recession, right? If you go into GDP declines and unemployment starts to go higher, if that is a scenario that actually happens. So from a revenue standpoint, I think things are still going to be good, because if you take a look at revenue for Target, Walmart, and Lowe's and Home Depot, revenue was good, right? It was stable. It's just that there was a shift in spending, right? It was consumer was spending a little bit differently this time, and they were spending less on other items, which are higher margin items, versus spending more on the necessities, which are their grocery items. So they're also low margin for a lot of these retailers, and as a result, you're taking a hit on profitability. And as we've talked about, what does Wall Street care about the most? It's earnings per share, right? They care about earnings per share the most, right? They want to see that earnings per share grow year over year. And that's why energy is the leading sector this year, up over 40+%, because their earnings have grown over 250% on a year-over-year basis, right? So we covered that in our previous video, where earnings is like a big spike, year-over-year earnings, 250% or something. So Staples has still been on a very, very nice, consistent uptrend. It is selling off, so closer to that 200, 300 SMA. That is going to be quote-unquote a buy the dip opportunity, where it comes down, retest that support, and then potentially starts to recover back higher. So we'll keep a close eye on that. We'll keep certain alerts that we're watching for Staples at those levels. The dividend yield is still decent at 2.2%. So coming down to those moving averages is something that we need to watch. And yes, we've got S&P 500 hitting a 10-year average forward multiple at 16.6. That's also something that we talked about in just my previous video there. And the 25-year average is at 16.5. So it's 0.1 higher than where we are right now. So if you think about it, on a relative basis, sure, the S&P 500 has gone up over the last 5 years or 10 years or 25 years, but earnings have gone up with it, right? So the earnings per share have also increased over time. And if you take a look at the forward multiples, S&P 500 is about the same level as it was 10 years ago, relative to its earnings on a forward PE multiple basis. So in my opinion, those are cheaper valuations, but sentiment's always been really weak in all of 2022, and that's one of the reasons why we're seeing so much selling pressure here. And tech stocks also getting sold off pretty aggressively now. With Apple here down 2%, we got Nvidia down 3%, and AMD down 2.2%. PayPal is down 1.74%. Google and Amazon. Amazon's down 3%, by the way. Tesla's down 3% also. And Meta Platforms is back under $200, down about 1.6%. So amazing day. Great day. Dogstar says 106. Come on, you guys. Stop. Yeah, bear market rally lost steam. So yes, we did get about an 8% move on the Nasdaq from Thursday's lows to yesterday's high. But as we mentioned, nothing really has changed, right? So ask yourself this very simple logical question: what's changed from a couple of days ago or a couple of weeks ago? If the answer is no, then there's no reason for. If you put yourself in the shoes of fund managers, institutional investors who are sitting on tons of cash right now, most cash ever since over 20 years. If you put yourself in their shoes, what is the reason for them to step in this market? What gives them the motivation to actually be a buyer in this market? Has anything changed from a couple of days ago? Has their thesis changed dramatically from a couple of weeks ago or a couple of months ago? They still think that the biggest tail risk is the global central banks being super hawkish and global recession. Those are the two biggest tail risks among institutional investors. And until that clears up, it's hard to find any buyers, any real buyers. Sure, we can see retail buyers buy the dip, and we see some mini rallies here and there. Volatility comes down a little bit, but the actual recovery, which the Nasdaq needs to go up 40%, by the way, to go back to all-time highs, that's going to take time. And institutional buyers need to see a reason. They need more visibility. They need more clarity. They need something that is more concrete in order for them to step in and be a buyer in this market. And we've looked at the order flows as well, right? We've seen tremendous amount of outflows in the markets over the last several weeks compared with inflows. So, example, Google is just hilarious. No buyers. So let's see. Yeah, so just under 90,000 shares traded right now so far in the first 15 minutes. So Max, Kat, if you live forever, and what one stock would you pick to invest in? Only one stock. I mean, that's such a difficult question. But I mean, it depends. Like, given the current prices, which one would I pick? Or given just in general, which one would I pick? Like, if it's just general, I would have to go with, it would be a tough decision between Tesla and then maybe another one, because of their larger TAMs and how much growth potential these companies have. But given the current prices, Tesla at $750, right? And you guys probably already know where I'm more comfortable buying Tesla. That's exactly why I'm looking at selling a cash secured put at Tesla, sub $400 strike. So that's something that we'll see maybe in the future. So So Matthew, Caddy, or what's changed sentiment has saved me dollars, also helped me overcome my FOMO. That's great. That's great. Congratulations on that. And I'm glad I was able to help. So thank you for that. That used to be Amazon. Yep. So it is going to be between, I was going to say it's between Amazon or Tesla. But given the current levels, I would pick Amazon, but Tesla at lower levels. So it would have to be like one of those two because of the larger TAMs and just so many verticals that they can tap into. So it is going to be Amazon at current levels, but Tesla at lower prices. But it'll be those two, really. Upstart's green? No way. You gotta be kidding me. Come on. Upstart cannot be green right now. Wow, this thing's up another close to 1% today. Getting bought up like crazy. So the 5-minute chart, as soon as the market opened, we had a lot of volume come in. 2.2 million shares. So yeah, it's up close to 1%, back over $47. So pretty good. We got a big gap to fill here. I would get delivered. I would have to actually be in the money if it's above $55. So this right here is going to be the big gap that Upstart needs to fill in as it moves back higher, right? This was the big drop after the earnings. Sandeep, when do you plan to buy Upstart again? I already bought as much as I wanted to. Obviously, I would have wished it would have stayed at these low prices, sub $30. I would have kept dollar cost averaging, but it has moved up quite a bit from those levels. It's up over 83% already. So I have a covered call at 55. So if I do get a sign, then so be it. Then yeah. But yeah, it moved up very, very quickly right after the earnings. Yeah, so Etsy, I think that's a great point, Gowden. I think it has definitely come down quite a bit. The multiples have compressed substantially. So if you come over to the actual statistics here, so it's trading at 28 times earnings, 5 times sales, 22 times free cash flow. I think the balance sheet is also decent, not super good, but they do have plenty of debt right now. So 2.3 billion debt versus cash only 982 million. Current ratio is going to be a little bit over 2.6. So current ratio is good, but total cash versus total debt is not a great metric. And then return on assets, equity, invested capital is okay. We look at those numbers in the mid-teens. So 13, 17% is good. And then return on equity, very nice. Return and gross margins over 70%. So it's a good business, but it's just not the environment that it's going to flourish in, right? It's kind of very similar to Amazon and some of those companies in the e-commerce space like Shopify, and they've sold off substantially from its all-time highs. I mean, Shopify is down 70+%, and Etsy is also down 73, 74%. Amazon, which is a little bit more established, more institutionally owned, fortunately only down 40%. Otherwise, it would have also been down much more than where it is right now. So the lower it gets, the better the pricing becomes. I've traded Etsy before. So if it continues to sell off, I've got a support at $74, $75. If it keeps selling off, then it's going to substantially de-risk to a point where it'll become very attractive at lower levels. So NASDAQ here, down 1.77, S&P is down 1.46, and the Dow is down about 403 points with a lot of stocks here. Well, AMD is starting to get some buyers step in, and so is NVIDIA. We're seeing some buyers step in for them. Tesla is also getting some buyers to step in, with Meta, Amazon, PayPal, Google, and Apple still struggling right now on the day. Let's see. So, Caddy, what about Google? So Google I absolutely love at this pricing. Like I really like Google and Meta Platforms. Those are two stocks, and even Amazon to some extent. But again, the earnings are not there for the company, which we know why. They're reinvesting pretty much every single dime back into the business to grow. Their warehousing, their logistics network, all that AWS advertising. So the growth is strong for Amazon, but the earnings are not. But Google and Meta, I feel like those are two companies that I really like at these valuations, multiples wise, and they're trading at some of their cheapest they've ever been in a very long time. So Google, I think, is one of the stocks that is being overlooked right now, substantially, because for whatever reasons, for tech, and people don't want to be in tech right now or growth. So that's a stock that I do have plans of buying more of, dollar cost averaging even further. So let's see here. Costco also getting smoked. Let's take a look what's going on. Costco down over 8.5%. Poor company, didn't even do anything today, but just selling off on the backdrop of Target, down 25%. So it did see some buyers stepping in. And then, right at 166, we have some resistance, and it's now starting to sell right back down. 150 is going to be that support level to watch moving forward. And then, of course, let's take a look at Walmart, down another 3.5%. So 126 seems like we had some buyers step in at that level. 126.08 is the support for the day. And on the 30-minute time frame, you'll see. Let's just go over the 5-minute. We do have some support at 126 levels. So that is really going to be that level to watch for Walmart. That's exactly where we bounced off of in March of 21. So, Walmart was down 17%, and then it got bid up here, and buyers stepped in to push it back over 150s. So keep a close eye at 126. Definitely very oversold. So, the RSI is under 20 right now. The MACD is really oversold as well. So there's no technical reversal opportunities here, except for like a dead cat bounce that you can find over the next couple of days, if any buyers step in. But trading below the moving averages, a lot of weakness. So if you are planning on trading some oversold stocks like Walmart or Target or anything, the only expectation would be for a dead cat bounce, but keep your stops like super tight if they do continue to kind of break even further down. So definitely an opportunity for a reversal trade, considering how oversold it is, but keep your stops super tight. Would you purchase Disney now that it's at 2015 levels, especially with summer soon? So Disney here, let's take a look. So I broke down Disney's earnings earlier this week, or it might have been last week when they reported earnings. Streaming numbers were good, and international numbers could have been a lot better. So I did like what I saw for Disney. The only thing is the valuation continues to be a little bit rich for the company, right? So streaming was very strong growth. ARPUs also grew, I think 4, 5, 6% year over year. And Hulu subscribers, ESPN, all that stuff grew nicely. And even their theme parks were very well growing year over year. But international ones, they had some lockdowns in Shanghai and other parts of China and Southeast Asia because of the pandemic resurfacing. So their numbers could have been a lot better. So we're definitely seeing good growth, good recovery from the pandemic. Year over year, we've seen some nice growth. I think 100% is what the revenue grew, and earnings also had a significant growth here. So this is the second quarter, 20 billion versus, if you compare that to second quarter 21, was 15 billion, and 900 million to 470 million dollars for the actual earnings. So I like what I saw for Disney, but the valuation multiples are still rich for the company right now. So I'm watching like sub 100 down to $80 for Disney right now. So Shiv, Upstart is good. Well, it was good, in my opinion, at sub 30. What? This thing's up 7% today? God, I'm probably going to get a sign. It's going to get in the money. Wow. Wow, this is a very strong move for Upstart. 6%. When the entire market's down, right? When the entire market's down, NASDAQ, S&P, all selling off. With Upstart, what a move. $50.75. That's the high for the day. Yeah, so I mean, Upstart was, in my opinion, a good stock. I mean, sub $30 is like an insane deal. As we talked about, bit of an overreaction. I think of 50% was just like so much overdone, despite the company reporting such good numbers. But when you think about the next couple quarters and even the next year, really, there is going to be some headwinds for a lot of fintech companies, right? Upstart, yeah, short term still looks great. 57% growth is what they've guided for, but they are still going to run through that period where growth really starts to slow down a little bit, and mortgage activity and auto loans and personal loans volumes will come down a little bit. So, those are some things to consider. Don't worry, Caddy, most options go unexercised. I mean, it's not a problem. Like, I still collected a premium, and at $55, that would still be a nice 80% gain from my, might be, right, sub $30, around $30. That is still going to be about a 77% gain, so that's not a big deal. But still, I mean, now I feel like it might have definitely been much higher, but price to earnings multiple definitely is now getting up there once again. 23, we analyzed the stock, right, earlier. You guys should check out that video that I posted on Upstart, a case study. It's a complete case study on Upstart from a couple years ago, because this stock has been the most fun and at the same time the most brutal in terms of volatility. This stock went up 1,600%. No stock that you can find in the markets right now, which is a known brand as Upstart, even Tesla didn't go up that much, that went up from December 2020 to October 21. In less than a year, that went up 1,700%. You can't find any stock out there that went up this much. And then to wrap it up, it went down 93%. 93%. Most stocks went down 70, 75%. And Upstart went down 93%. It's been the most volatile stock out there in the markets. Can't even imagine what the beta is for this company. So, yeah, it's been a lot of fun, but it's also been definitely very stressful for Upstart shareholders and investors and traders. So, Lal, I promised DigitalOcean, so I'll definitely see if I can do a video on them. It's better if they report earnings. So they reported earnings on May 4th. I'll see if I can actually do a video on them very soon. Seems like they've also had something very similar to Upstart. They went up 286%. And then went down 73%. So they had a very similar price action to Upstart. Just kind of like talk about V-shaped recovery, more like A-shaped sell-off here for a lot of companies, right? People talk about that V-shaped recovery in the markets. What a lot of stocks have witnessed is like an A-shaped sell-off where they went up and they're right back down. Even PayPal has like an A-shaped sell-off here. If you go over to PayPal's weekly chart, you can just see how quickly it went up and then right back down to the same level as it was before, and even lower than when it was at before, like during the pandemic, right? March 2020 levels. They should call it the mountain pattern. Yeah, so that is going to be the mountain pattern, I feel like. The A-shaped pattern or the reverse V. There we go, with the NASDAQ here down even more. S&P 500 down 1.75, and the Dow is down 1.42. Let's just run through our Dow 30 stocks, and we'll talk about cybersecurity, we'll talk about banks, we'll go over Chinese stocks, and we'll just wrap it up then. So, Walgreens, wow, Walgreens down 5%. They've got dividends coming up. That's probably going to offset some of my losses today, but man, wow, retail sector is really getting hit today. They did announce a dividend today, 48 cents per share. So, you know, they've got a nice yield of 4.25%. That's the reason, the dividends are primarily the reason why I'm holding this dividend stock. But man, that is insane. Walmart down close to 4%. Home Depot is also down 3%. McDonald's, Coca-Cola, Procter & Gamble, Apple, Disney, we got UNH, Microsoft CRM, Salesforce, everything is down. All 30 stocks except for Amgen and Caterpillar. Visa is more or less flat. So Caterpillar's more or less up here, close to 1.85, close to 2%. So pushing higher a little bit, so 1.81%, and more or less is consolidating sideways, right, since February of 21. So Dow is struggling. Cybersecurity, all stocks are down. CrowdStrike is down 4.2%, $140. So 117 is what I'm watching on Crowd at the moment. Resistance is going to stay put at 154. What are going to be those premiums for CrowdStrike? Let's take a quick look. So let's just do June 10th. All right, puts. We're going to go to 110, 115, $3, $2 is what you can get. If you go a little bit further out to June 17th, 110, 286, 100 is 160, so you can get a little bit over 1.5%. That's not enough. So definitely waiting for lower prices, but would be interested in selling cash to good puts on some of these stocks here that are selling off. So CrowdStrike is one. CRM is another one that I'm really watching, down about 1.5%. Shopify is down close to 3%, so just over 361. And we've also got Netflix down 3.6%, 183. So let's take a look at Netflix too, just for fun. So June 17th. Netflix, I feel like 150 is kind of like my fair price, fair value, 150, 145. I wouldn't mind owning Netflix at that price point because I think that's a fair value, like super conservative multiples, super conservative estimates. I think Netflix would be a very good deal in the 140s, high 140s, low 150s. And we can get like $2, $2.50 for that strike, which is not bad. So it's not a great return, but my goal really is to be a Netflix shareholder at those levels. So maybe I would consider those levels in the 140, 150s. So, all right, ZIM, let's take a look. So ZIM is down close to 5%. Let's take a look at their earnings. So earnings reported was $14.19. Reported revenue was $3.7 billion. So there might be a lot of reasons as to why ZIM is selling off. It could be the entire market. But one thing to really note with this company, and I've mentioned this time and time again, and that was one of the reasons why, we didn't buy this prior to the dividend announcement, because when you look at the options chain, it was almost guaranteed the stock price was going to fall after the dividends, right? So dividends, when they were going to be announced and issued, it was guaranteed that the stock price was going to fall. And after that, it basically dropped 45%, right? Because that type of discrepancy you're not going to find in the market, right? It's going to correct itself. So one thing that I warned with ZIM Integrated Shipping is the future for the company, right? Spot rates have really gone up substantially as there's been a higher demand for freight and logistics and shipping. And at the same time, we've seen some supply chain bottlenecks and constraints. So as a result, the demand is really high, supply is not that much. So you get the prices, spot rates push higher, and revenue was up insanely year over year, which is still translating over to very high revenue. So 3.72 billion, up from 1.7 billion same time last year. So it's still 100% growth for the company, and revenue also came in at $14, up from $5. So, you got a 200% growth in earnings, revenue up 100%. So that's great. But over the next couple of quarters, you will start to see the company lap over some very tough comps. That's why, the PE is expected to come down, which is why the multiple is so low, 1.7. So be careful with this one. Yes, it seems very appealing with a 60% dividend yield and, trading at a 1.7 times earnings, but the future is what really matters with companies like Zim Integrated, because spot rates can, as fast as they went up, they can also come down. So, all right, let's just take a look at Chinese stocks here, and we'll cover NIO as well. So let's see. So Alibaba down 1.36, NIO's down about 0.5%, just at 1650. 1650 is actually a support for NIO right now. That's going to be the level to watch at the moment. So we are actually, the support is around 1150, 1160 levels. We are getting some buyers to step in around that support area, but overall it's just been on a consistent downtrend. It's almost an identical pattern to what we have seen for a lot of companies. This has been the lower highs and lower lows for NIO. So support level is going to stay inside this green rectangle. We are a long ways away from those moving averages, and the first important resistance break that NIO needs is going to be at this resistance at $24. So $24, that's going to be the level that if NIO can break out of that resistance, then we can potentially see some higher highs and higher lows for the company. Upstart's at 10%. What is going on? 10%. What a move in Upstart. Wow. It is pretty much going back to where it was prior to the earnings. It's incredible. AMD is also green. Let's take a look. Wow, AMD is just flat today, up just barely green on the day, but Amazon hurting quite a bit, right? It's down 4% now, with Google also down close to 2%. Tesla trying to turn green, and Nvidia here also trying to turn positive on the day. So what a move on Upstart. It's crazy. So if you go down the list here, Ulta is down 6%. Walgreens is down 5.6%. So that's not fun to watch. We got Grow Generation down 5%. CVS also hurting. We got CVS, Target, Amazon, Walmart, Walgreens, Costco. I mean, across the board, you've got retailers just getting destroyed here, right? I mean, I just named 5 right now. Costco is down all over 9% now. Amazon's down 4%. Walmart is down over 4%. Target probably guessing like 30% now, 25% still. And then CVS down 4.68 and Walgreens down 5.6. Bad day for retailers. Procter & Gamble down 2.7. Overall, the market's been very much back and forth so far. Look at that, up another 5% today. From its lows of 484, it's actually moved up 52%. Not a bad move. Square's up. Square also seeing a lot of buyers step in, so up over 4.6%. So Upstart, 11%, 12% now. Upstart could be one of those stocks that might have been shorted. Actually, it was shorted pretty heavily. So, if you come over to Wall Street Journal, that's something that we also talked about in our previous video. You'll see that if you go over to Upstart, as of April, last week of April, the short interest was pretty high for Upstart. So let's just go over that very quickly here. So Upstart here, so there we go, 30%, right? 30% of the float was shorted as of April 29th, right? So that was the last week of April, over 20 million shares shorted. So I think the company fell in May, right? Yep. So I think that's exactly what's happening right now. So going into the last week of April, we had 30% short interest, over 20 million shares sold short. And then when the stock basically plummeted down 56%, actually it was down over 65% from its pre-earnings high. And now we're starting to see a lot of shorts covering, and that's adding to more sort of accelerated buying pressure and, people buying more shares of Upstart even further. So that I think is one of the reasons why Upstart is going up so much on the day. But yeah, very nice move. And now, if I could go back 24 hours, covered call, probably going to get assigned here at $55. Beyond 55 is going to get in the money. So developer artist Caddy, whale rotating into small caps. What do you think? I do think that this has been more like shorts squeezing again, like in other words, shorts covering. Because when I look at the type of stocks that are up, right? We got Upstart, we got Roblox. Roblox is another one that I showed you guys that has a very high short interest. Then we've got SoFi, we've got Square, AMC's on the list, Plug Power, Fubo and DraftKings. They're both heavily shorted. We've got Twilio, Unity Software, Astrospace, Roku. So when I look at these types of stocks that are up like 4, 5, 6, 7, 8%, and the entire market on aggregate is down, it doesn't convince me that this is institutional buying or rotating into small caps or anything. This is more like shorts covering for the most part. Part of their positions they might be covering, and as a result, some of these names are actually higher. With Upstart, obviously the clear winner up over 12%, which is crazy. $52, $53. It's the high for the day. This thing is just on a rocket today. Like it's just making high of day as I'm speaking. Like it's high of day by the minute right now. Hasn't seen a single red candle in the first 38 minutes. Sandeep says, I'm jealous of you. I was waiting for Upstart to come at $20. Was a bit greedier. Man, at $20, it would have been absolutely ridiculous deal with a PEG ratio setting at 0.2 or 0.25. With the earnings growth and the price earnings multiple that we looked at, it was just insane. It would have been crazy. Even I can't believe it went to sub $30. I was so excited to buy sub $30. I was like the happiest person at that time. It's like I can't believe I was able to get Upstart sub $30. Brandon Caddy, if you had to pick one for a long-term DCA, would you pick SPY or QQQ? That's a great question. I think QQQ is an obvious answer for me personally because I'm a little bit more growth-oriented. SPY is a little bit more balanced, more diversified. You get other sectors as well. So it really depends on person to person. So for me personally, it's going to be a little bit on the growth side. So QQQ would be a better option for me personally, but for people who want to be more diversified into other sectors as well, SPY is definitely an option. So a lot of cybersecurity stocks are down, right? So they have been selling off quite a bit because of multiple compressions. They've got their earnings coming up as well. So there's a lot of companies still yet to be reporting earnings. Nvidia is one of them that reports next week. I'll do a video on them soon. And then a lot of cybersecurity companies also report earnings soon, but they're not down too much. In fact, CrowdStrike was trading as 140, and then it was down about 5%. Then we got buyers to step in and push back higher. By the way, guys, we have over 488, almost 500 people watching and only 154 likes. Come on. Do I really only get 154 likes for this stream? I'm sure we can do a lot better than that, right? For Upstart, just give a like for Upstart. The more likes we get, the higher it goes on the day. So just drop that like button for Upstart, not for me, for this stock. So thank you so much. I appreciate that. So why didn't you buy more shares? Why didn't you buy more calls then? I just picked up more shares. I prefer calls. I'm not really super into buying calls or puts because there's several different variables that you have to be right. And on a consistent basis, it's quite challenging to do. So I'm more on the buying shares front, and then of course selling covered calls and selling cash secured puts. So we'll see what happens. My best case scenario right now for Upstart would be for this stock to just stabilize around these levels, not entirely fill that gap, but instead stabilize at around $50, $51. But man, I've got a long ways to go until expiration, so it's gonna be a while. Neeraj just joined your course yesterday. I love it. Thank you so much. I appreciate that, and glad you're enjoying the course here. Come on, give us some small cap good stocks. So I was thinking about doing the video on small cap stocks, right? Under $10 billion market cap, and doing a video on them, 4 or 5 stocks that I really like at the valuations, the growth rates. So I'll probably do a video like that very soon. So I'll do like a small cap specific video very soon for you guys. So that will be on the radar for us. So anyway, that's going to be it. It's pretty late here. So thank you so much for joining. I really appreciate it. And make sure that you drop a like. Markets right now are pulling back a little bit. So NASDAQ down about 1.75. S&P is down 1.75 as well. And the Dow is also down 1.5%. So about an equal down day across the board. But again, it really matters where we close. It doesn't really matter where we are right now or where we open. What matters is where we close. So thanks again so much for joining in. I really appreciate it. Yes, I'll include SoFi. I'll include InMode in those videos. I'll definitely do like a complete analysis on those stocks in the future. So thanks again for joining. Really appreciate it. Make sure that you drop a like and of course subscribe if you're new. Patreon and Discord links down in the description below if you want to again get those real-time buy and sell alerts, option alerts, and all the updates and private videos and tutorials, all that stuff. So links down in the description below. As always, happy investing. Hope you guys have a fantastic day, and I'll see you guys tomorrow for another